5:27 p.m. on the day of 2nd April 2024. Okay, Tuesday. So I am going to share an idea with Bitcoin, BTC, and it's something that I've already shared with my members on the WhatsApp group, my friends. I told them right here on the 21st of March that I've been thinking to take sales on BTC, and I explained a little bit about it. I said it swept good high to give an all-time high, traded back into the range and used it as support, created a supply there too, and is on that daily supply. So I made mention of last 2 years where I took a short on, took a sell for 7k and I missed it. So afterwards, I also made mention of them being careful to take to buy any coin and coming. So yeah, all right, I say be careful. On that was until 27th. I said be careful about buying any coin now. We are entering the second quarter of the year, which is April. So I explained why they see why it is selling. I shared them a setup of the supply zone at which it traded into after hunting its previous day high and stuff like that. So let's quickly go to the chart and I will make my explanation. So we'll go first to higher time frames that I will explain everything that I was talking about in the group. So right here we saw the accumulation phase for buy right here, that was last year, so which printed a lower low and it accumulated for buys. It did a accumulation, trade higher, another reaccumulation, and then it trade higher to be drawn to a range high that is an external high, external liquidity. So like I always teach, we're always dealing inside the range high and the range low. So when a range low is created, we see a structural shift, then we'll be focusing on targeting a range high. That will be where the algorithm will be drawn to. So right here you can actually see the liquidity that it took out from this low, in which I explained. I gave you guys the update. I gave you guys the signal last year about buying BTC, and I said it will be drawn to 12-month high. I also posted on my Facebook page about it last year. So we saw it trade to the 12-month high and also to the external high that we're talking about. So now we have taken liquidity right here, and what is resting on this high? We are having buy stops on that high, which has a basal liquidity pool. So that means that the algorithm bought at a very cheaper price using the law of supply and demand. We bought at a very cheaper price, and we are looking at where we'll be selling it off, and that will be at an expensive price. So now we have gone to that expensive high. We created a new all-time high right here after taking an old all-time high right here. So we have taken liquidity from that high. We need to be drawn back into the range to print a new range low. So we have taken that high, and we are on the second quarter, like I said in the group. And something, those that were on my mentorship, I told them everything about what we have in the direction of the directional bias we might be having for a period of 1 year. I explained everything using the algorithm range, that we will know which month will give us the high of the year, which one will give us the low of the year. Something that I told them right there, using the algorithm range, knowing which week will give us the high of the month and which week will give us the low of the month, like we did on EURUSD, taking the trades of last month short on EURUSD, because we know which week will give us the high of that month and which will give us the low of the month, and we know where the price, the algorithm wants to deliver the price into, which is a previous month low high. Yeah, so it's the same principle right here. We know which month will give us the high of the year probably, and we will know which one will give us the low of the year. So the first one that happened was an expansion, right? So the expansion for this year 2024, the first 3 months, was to take liquidity from this high, just like saying we're having a fake out, like a bull run to take our liquidity right here. Now we enter the second phase. So we accumulated orders from this high, okay, and we entered a consolidation, and we are now trading backwards into the range to be drawn to this fair value gap right here. So when it gets there, we will know what we want to we want to see for the month of May, right? So I would like to see if May will trade into this fair value gap. Now the question is, will I see this as valid? The reason why I might not be seeing it as valid, though we will not say it yet because we are still dealing inside the range, so we don't know what may we do. But my expectation is, since we are having a new all-time high, I think that algorithm will not want to go again to print another all-time high. Like, it doesn't make sense to me, because it has to print an all-time high after taking a previous all-time high, right? So it will leave that protected for next time. So next time when it wants to come up, it will print another all-time high, and that could possibly be around next year or something like that. So now we need to trade into this inefficiency right here. That is the idea. So when you trace into it, we will know if the month that we are going to trade into it, if it wants to continue bullish or not, or we keep going lower. Alright, so we have this violated already, right? And we have this fair value gap right here violated, and you guys know I already gave you guys the predictions last year that would drawn to this high, ignoring these fair value gaps. For the reason of we paying attention to the 3 months time frame, we know this is a higher high right here, this is a higher low, so we have a new higher high, right? So now we are having inefficiency, and price needs to trade lower to fill up the buy side inefficiency to mitigate it with supply. So demand should be equal to supply. All right, so now that is what happened right here. We have taken this liquidity, we need to sell off. So it's like saying, if we are the institution, if I'm an investor and I invest at a very cheap price, I would like to sell off at an expensive price to take out my profit, and will wait patiently for it to get cheaper that I could buy again. Alright, so we need to fill up inefficiency. We can see April trading lower, so we're looking towards April, May, June, and yeah, we'll see. So let's just focus on this month, and then this is what I'm marking right now, is marking previous 3 months highs and lows. That was January, February, and March. Alright, so that is it right here that I marked. Alright, so going down to the daily time frame, we can now see that when price traded into that all-time high, it did a constant, it created resistance, so it induced traders into the market, retail traders into the market that wants to sell right here, so activating the orders so that they could be what, stop loss right here. And remember what I talked about stop loss in my previous videos. I said your stop loss is in the case of it being an area of resistance, your stop loss is buy orders. Alright, so you're having a buy sell liquidity pool right here, those that want to buy, and we still have another type of trader who placed a buy stop. Alright, that says if price breaks that high, let it activate my buy order, and those that are trading break and retest. So that is the reason why it is referred to as buy sell liquidity pool. Right, so the algorithm needs to go and do that resistance of a thing, reacting for sales right here, so that to induce traders into the market, so that the institution will like to sell to those who wants to buy. Alright, because if you want to sell, you will like to see buyers in the market, so they have to induce buyers to get into the market above this premium pricing so they can sell to them, right? So that is what happened right here. Buyers are now in the market. Why would you be buying at a premium price? Why would you buy something that is expensive? That is the big question you have to ask yourself. If you're a trader, if you are an investor, you know where you want to buy, and you know where you want to sell. So why would you, the question you have to ask yourself, what am I doing at a premium price? Should I actually be there? Alright, I always teach that whatever you're doing in trading is similar to what we are doing in real life. So always ask when you're looking at the market, you're analyzing, you use what you're doing in real life to analyze the market. Just like I taught about support and resistance, right? I said, let's apply the support and resistance concept into our daily life, into our real life. So, and I said that if you hit a wall with a hammer, right, the wall will stand force, right? But the continuation of you hitting that particular spot with a hammer, what is happening to that wall? That particular spot gets weaker, right? And before you know it, it gets destroyed. That is principle applying support resistance. Multiple testing of an area of support or resistance does not mean that it is getting stronger. It is actually getting weaker. In that case, it is building up liquidity above resistance and below support level. It is building liquidity, and that liquidity is traders who have that mindset of what they have taught them about retail concept, that support resistance mix is getting stronger. They are now in that market, making it weaker, right? Making that area very, very weak, building up liquidity. And that is what the institutions are looking at. And via what the program of the algorithm is being given to solve a particular problem in the market, the problem that it is given to solve is to take orders from who wants to buy and give it to who wants to sell, and as in interconnection of sellers and buyers. All right, so if there's sellers in the market, the algorithm is programmed that if there is sellers in this particular price level, I want you to go and buy those orders, settle them. If there are buyers in this particular price level, I want you to go and take those orders, settle them. So the algorithm, the program giving it to you, is that it is solving the problems of who's buying at a price level and who wants to sell at a particular price level. It has to go and fulfill those orders. And that is the concept, the idea you need to be using when you're in the market. What is this price level? What is happening around here? Is it too expensive? Is it too cheap? The idea is that the algorithm wants to buy at a very cheap price. So if the program of which whoever programmed this, how the government or the market is being programmed, you know that when you're talking about currency pairs, EURUSD, it is the price at which the Bank of Euro wants to buy dollar or wants to sell the dollar. Like they want to exchange the euro with the dollar. All right. So if they want to exchange that dollar, the Bank of the United States will give them a price quote that this is the price at which they want to sell or the price they want to buy. If it is something that they are willing to do, then they will buy or they will sell. That is the concept of trading. That is what supply and demand means. It is very important you need to study your economics and your accounting or finance, something like that. And the key thing you need to understand is understanding everything concerning investment, concerning buying and selling, concerning supply and demand. That is what you need to study. So I need you to go back, study those stuff, the rules concerning the market, supply and demand. If you have textbooks, you have to read those textbooks, or you go back to school and learn from your economics teacher who teach you supply and demand. That is what you should. Once you have that understanding, that knowledge, you can use that to apply in the market. So we turn that into area of resistance. So buyers were in this market, right? So say there are buyers right here, which is your stop loss, then it needs to settle them. So it is a premium price. I want to sell, and I need buyers. So I need to sell off to those who are willing to buy, and the algorithm has to do that. So the fake out occurred, and then the price has to do what it has to do. So if we keep on refining to the 4-hour time frame, we can actually see right here as the structure was printed. Then when price gets to that resistance level, it had a demand zone. It created a buy order to take out liquidity from that high, and then it tested it, and then it broke. Now, what we're looking at is what is responsible to break this demand level, right? So that was what we saw on the 1-hour time frame, and that was what I shared with them, with my friends. Let's go to 2-hour. So when you pay attention to it, you can see we filled up inefficiency, and we left supply zone, and that is it right here. So that is a supply zone at which it tapped. And if I have to refine down to the 1-hour time frame, this is the order block right here. So it is a very nice and clean setup. So price traded into it. One thing with crypto BTC that you always consolidate is very good at ranging before it finds its way out. So that was the previous day high that it hunted. Then after that it shifted. Now inside here, this was where I told them about being careful to buy BTC. I explained everything because it's at premium and it's now creating support or resistance and inducing traders into the market, so it needs to take those orders and manipulate them. So there was a supply zone that happened right here. I think there was a news that occurred right there that left behind a supply zone right here. So this is this supply zone, So that was where that Gordon tapped into again, and then it sold off. So the confirmation was it did a stop hunt. Like we have a consolidation, so we have an accumulation, manipulation to the upside, taking liquidity, trade downwards, taking liquidity, and retrace backwards to the other block supply or left behind, and then the sell occurred, and then we see it happen on the month of May. Okay, so we're having the first week of May opening, and it starts to trade lower. So what will be the target? Alright, the target will be liquidity right here. We have set stop. We have set stop right here. Alright, because there's nothing there that could make the price trade higher, right? And these are liquidities left in the month of March. Then let's go to the weekly time frame. Then we have an inefficiency. So we want to see it trade into the inefficiency. That was what I told them at the group. I say we see what it will do when it gets to the fair value gap. Alright, so that is it right here. And we have already seen euro deliver to previous month's low that I explained to them. Right, so we have hunted April open and it hunted March, and now we are patiently waiting to see our confirmation. Alright, so we are actually doing nothing at this first week of April. We're just patiently waiting, and we commence probably second week. So we are already seeing that there's a supply right here. So in that supply, it violated the demand zone right here, and it gave us an inducement. So now Monday is trading lower, so we want to see Wednesday or Thursday get here to give us like a high of the week. And if I want to sell, we see a confirmation and we will continue selling. Alright, so that's what the idea that we have. Yeah, so we are just patiently waiting, nothing to see that we could buy from. We have to wait till it give us a confirmation. Right, so yeah, so this is a Basta liquidity pool. Alright, so see you guys later on. This is it, and take care and be safe.